Hello, everyone, and welcome to the first ever OETV Pro Insights live episode. What an honor we have to have Matt Tuttle join us for this occasion. And Matt, thank you for making the time to be with us on this very busy day for all asset managers.
Thanks for having me.
This event is brought to you by the amazing team at Open Exchange, the leading virtual event platform. Speak with them today about all of your virtual event needs. Well, there wasn't any surprises coming from the headline 75 basis point increase by the Fed today. They are determined to curb inflation, with Powell saying that there isn't a painless way to get inflation behind us. And he cited that the FOMC is split between 100 to 125 basis points for the rest of the year. Matt, do you think it's realistic for the rest of 2022?
I do. I think, at this point, we got to take them at their word. And, we're going to have higher for longer, which I think was the real big shock here. Like you said, everyone knew 75 was likely, certainly 100 was potential, but everyone kind of knew, all right, it was going to be 75. I think the surprise was, hey, this is going to go on for a while. I mean, even though he said that at Jackson Hole, I think there were a group of people who maybe thought, all right, he's going to walk those comments back a little bit. And obviously he didn't, and you saw the reaction.
Yeah, well, listen, the market's finished up just above its lows of the day. But as we said, Powell said there isn't a way to get, there's some painless way to get inflation behind us. But he also added that we're at the very lowest of what is, very lowest level of what is restricted. The question here is, how painful can this get? Powell mentioned that job openings need to decline significantly to cool inflation. Matt, headlines like this have been around for a while now, but with Powell coming out and stating this, is it a catalyst for everyone to hit the sell button?
So it should be, but it should have been a long time ago. I mean, they should have sold after Jackson Hole. They should have sold after CPI. They should have sold after he said inflation isn't transitory in November. But, we just breached some real important levels again on the market. We've been watching 3,900 on the S&P 500 as kind of a line in the sand, and we were below that number coming into today. We rallied back up. It looked like they were going to try to get it over, and things didn't work out that way. So really, to me, that the path of least resistance right now is retesting the June lows and another leg down in this bear market. So it's going to get worse from here, unfortunately.
Yeah, and listen, there was other comments he added in there as well, like the people who lose their jobs, the economic pain involved in bringing inflation down is going to have a negative impact on them. But he's going to set the economy up for another long expansion. But we'll have to wait to see how long that actually does take.
Go ahead.
No.
I was going to say, in my mind, we're already in a recession. I think, Powell saying, the economy's got to slow and jobs have to come down. Yes, that's going to happen. But, we're already in a recession right now, and it's just going to get worse from here.
Yeah, I did also see from a senior portfolio manager at Federated, Hermes, that he thinks that Powell is delivering quite the hawkish message, and any immediate rally here is to be viewed with deep suspicion. With a fund of their size being suspicious, surely there will be others with the same thoughts. But is this a case of trying to close the gate after the cattle has all gotten out, to butcher a more common term? But do you think that there is a decent percentage of funds that have been anticipating this?
So, I think there should have been. When you talk about active management, to me, active management should be active. And, it's obvious the trend is down. We failed at the 200-day moving average a few weeks ago, creating another downtrend. So if you're an active manager, you should have noticed this. Unfortunately, you've got a lot of portfolio managers who have to be fully invested. So, lately you've seen Apple, for example, jump up a lot on certain days, and people come out, Apple's this great stock. No, portfolio managers are using Apple as a cash alternative. it really has been a canary in the coal mine. Whenever you see Apple jump, fully invested portfolio managers are getting scared.
Yeah, and also Powell also today said clearly that they've moved to the very lowest level of what might be restrictive. And the view of the committee, there's a ways to go. How far do you think they can go with these rate hikes?
They can go pretty far. I don't think they're going to. You saw like Elizabeth Warren come out today and really bash Powell over the head. And, I think there will be a lot of pressure if the economy does tank, which, again, we think it will. And, so I think they'll wimp out at some point and have to start scaling it back. When that is, I don't know.
Okay, well, let's go back to that word recession. It's just not going away. And today's comments certainly won't ease any of those fears. Powell was asked directly on the chances of the US having a recession. Powell says he doesn't know what the odds of a recession are. There's a very high likelihood of below trend growth for a period. The Fed forecasts indicate well below trend growth this year and next. You've already said just before, it's beyond doubt that we're in a recession. And if we are in this recession, does that change anything for investors, Matt?
So, I think at some point the Fed's going to wimp out. I think they're going to have to wimp out. There's going to be too much pressure. And, and that's why you see the market pop every once in a while. That's why you saw it run up to the 200-day moving average a few weeks ago, because you had a lot of people who thought, oh, there's going to be this pivot. And then Jackson Hole happened. They're like, oh, maybe there isn't going to be a pivot. And CPI happened. Oh, yeah, maybe there definitely isn't going to be a pivot. At some point, I think there's going to be. Again, I think they're going to wimp out. I think there's going to be too much pressure. When that point is, I don't know. But before that, it's going to be painful. It's going to be painful in the economy, and it's going to be painful in the stock market.
Okay, and then one other thing it was touched on, I don't want to wrap up with this one, but there's been a red hot housing market across the country. Powell says the housing market probably has to go through a correction to get a better balance. Is this going to put even more fear into investors?
Again, it should, and should put more fear into homeowners. I mean, you and I live where there's the most expensive real estate in the world almost. For a lot of people, their home is their biggest asset. And certainly, while I don't worry about a 2008 type of event, how many people, because of a recession, are going to be taking out home equity lines and, all the ramifications of that. I mean, it's definitely a concern.
Yeah, well, listen, people got the long memories, right? And we remember what 08 was like, and like people lost their houses during all of that. So as soon as you hear words like that or conversations like that, that fear factor comes rushing back into their heads. So the market should be very, very wary of that.
Definitely. And, and homeowners and investors, you need to plan accordingly.
Matt, thank you so much for your time. This is great advice and great knowledge for everyone to be listening to. And you have a great day, okay? Thank you again.
All right, you too. Thanks.
And for everyone else watching, good luck investing.